so far, market doesn't seem to be moving that much this morning outside of potentially the pound, just because you had some, they kind of had their central bank reporting. The Bank of England's Monetary Policy Committee had their official bank rate votes this morning. And the way this vote works is there's these three numbers, right? So we got 0 to 7. But what does that mean? The first number is how many members voted to increase rates. The second is how many voted to decrease rates. And the third is how many voted to hold rates. So 2 voted to decrease, 3 voted to hold. The forecast was all 9 of them to hold. So that's a pretty dovish vote. So they're voting for rate cuts. So you would think maybe the pound would go down on that. Well, it did initially. You can see the pound traded lower, and technically is still lower on the day, albeit not that much. The bigger story is that, okay, looks like the central bank of England, the Bank of England, wants to cut. That's kind of what was in consensus. I believe the outlook is for a cut in August for the Bank of England. Meanwhile, in the US, expectations still hover around September. Anyways, let's take a look at the dollar here today. Dollar pulling back slightly, but had a big pop. You can actually see the dollar moved higher during that period from the Bank of England, simply because if other central banks are looking dovish, it could lead to the dollar being relatively on top. So, you know what did like this market a lot, or this news a lot? Gold. Gold liked this a lot. You guys ready for your quiz question here?
You what?
Your quiz question of the day, okay? Your quiz question of the day is, why is gold up on the Bank of England's news? I mean, take a look at this. Right as they reported, gold starts pushing up. Fundamental trainees or experts, why is the Bank of England's monetary policy here? Why is this making gold go up on the hourly chart? Anybody tell me? The answer is any central bank, even though this doesn't have anything to do with the pound, right? Gold versus the dollar. Rate cuts, whether they're from the US, whether they're cuts from, I believe, Sweden cut rates. There was another country that cut rates as well. Cooling in the monetary policy section is usually good for gold, especially when it's linked with, economic slowdown, right? Fetch me their souls. Yes. Many an hour spent on COD zombies for me and Frank. Probably could have done some better things with that time, but it's okay. Yeah, so anyways, the idea is if you have central banks cutting interest rates, that looks good, right? For gold, it's positive, whether it's the US central bank or not. A trend towards central banks wanting to cut rates is a positive for gold. Euro USD long, what do you think? From a technical perspective, I kind of like it, but at the same time, I don't like it. This fizzled out, this long wick at the top is a little sketchy. But let me check the edge finder. I think it is giving us a bullish reading on euro. Yeah, Euro USD is technically getting a bullish read. But to be honest, if I want to trade the dollar, I'm so much more interested in gold. Like, being bullish euro, I'm going to pay swaps because I have to trade that on a Forex broker. I'm going to pay swaps to hold Euro USD. Whereas with gold, you might say, oh, well, Nick, you got to pay swaps on gold too. But because I'm in the US, I trade GLD. So let me show you this. Here's my current Oh, I'm not logged into my broker. Hold on.
Did you know that we have 100% free trading tools and data available for you on our website, a1trading.com, right now? We have free courses for you to browse. You can also check out things like retail sentiment and free articles from our analyst Frank that include things like Edge Finder screenshots and trade setups. You can find all of this and so much more for free right now on our website, a1trading.com.
I'm not logged in on TradingView, but I'll just pull it up here for a second. Give me a moment. Positions. So what I can do if I want to trade gold is I just trade GLD. As a swing trader, this is perfectly fine for me to gain exposure to the price of gold through an ETF that tracks the price of gold. So I prefer to go long gold, and that's what I've done. So I'm currently sitting in a position. It's doing okay. We're up like $1,500 on this trade. The question is, with this monetary policy, kind of pivot here or trend of central banks around the world looking to cut rates, I like that story for gold. Rather than try and pick the best of the worst currency pair, I would prefer to just kind of go generally bullish against fiat currencies, because gold, remember, the cool thing about gold is that yes, it's priced against the dollar, but it's not isolated to the dollar's impact. This is basically, when you buy gold, what I love about it and why I'm generally more bullish on gold than I am ever bearish is because you're making a bet against fiat currency in general. You're saying, okay, I'd rather buy something that always has value versus something that they endlessly print more of, right? It does not mean if it was perfect and that easy, then gold would just move like this, but it does not, right? So gold still has really tough periods. So you could totally make money on the short side with gold when it's appropriate. But for me right now, if we're trending towards rate cuts around the world, then yeah, I mean, I'm going to lean towards something else. Okay, 231K just came out for unemployment claims, slightly higher than expected. They also revised the number up 1,000 from previous on the previous report. So 231 came out. Let's take a look how that is impacting the dollar here. Dollar index on a 15-minute chart. Not liking that claims number. You can see there is a sell-off in the dollar index here this morning. How's the stock market going to react? I think if the trend recently makes sense, that's going to be a positive for the stock market. Stock market's been cheering the slowdown in the jobs department. It sounds weird, but it does kind of make sense in the sense that, cooling jobs allows for rate cuts to still be on the horizon. So this is not bad if you're cheering for rate cuts. By the way, the biggest cheerer of rate cuts is gold, right? Remember, gold would love to see central banks cutting rates, whether it's the US or other ones, because that would decrease the dollar's attractiveness. Not only the dollar's attractiveness, but more importantly, the dollar's purchasing power. Because if they lighten up and they, loosen up, really, more printing happens, more dollars. More dollars means gold becomes relatively more attractive. When you have hindsight in your favor, the problem is, like, you could say that about, stocks, right? You could say, look, you just buy and hold and it looks so easy. But then, I point to the recent example was 2022. What if you had bought and held here? Look at this. If you bought and held the S&P from 2022, obviously I'm picking the high, so I am cherry picking the worst possible example in recent history. But you would have held on to that thing and not made any gains for around 2 years, right? 2 years just to make a modest gain. Now, if you kept holding, then yes, you've been rewarded since that. You'd be up in 861 days. You'd be up 7.86%. Still not that great, right? So their buy and hold is certainly a portion of my own kind of personal finance. But when it comes to my active trading account, I'm trying to get a little bit better than just passive investing. Claims came out this morning. They came in pretty light. Market liked that. Stock market's up. NASDAQ is up. Not huge, but modestly. Look at gold. Hello, gold. Good morning. Let's try this again, gold, shall we? So gold came up here, looked good, cash money, and then just said absolutely never mind. But then the question is now, can we get a breakout of this high? So we're back to that spot, and this is what I'm looking for on gold. I would love to see this thing break and close above here. And at that point, what I can do is I can then trail my stop loss. We've got a higher low. This is solid stuff. Price action wise, I think I might have a profitable trade here. Well, I am in profit, but the way I look at my trades is not floating unrealized P&L. What I look at is where's my stop loss? My stop loss is technically still at risk. What I would like to see in order to take that risk off would be, let me see the breakout here. If that happens, great. We've got gold making a good push, and then we can repeat the process here. Let's say it breaks out again. I can trail my stop loss further in, right? That's the goal. So I trail stops. It is not the holy grail. There's times where trailing stops are the most frustrating thing on the planet. But there are other times where trailing stops makes you feel like a hero because the market just keeps going and going and going. Will that be today? We'll see. I think gold has upside, but it's got to prove it. So unemployment claims came in higher than expected. So more people filing for unemployment, definitely going to be not a positive thing for the dollar. There's a pretty good move on the dollar index. Speaking of dollar index or dollar pairs, Miko, what do you think? Any dollar crosses setting up for you today?
Yeah, I'm liking Euro USD and NZD USD to the downside. I'm still very bullish on the DXY, despite the downside we are seeing. Excuse me. Despite the downside we're seeing, really nice bounce off this high here, and I'm still looking for us to return back to the highs at 106,400. So that remains the plan as long as we can hold this level here. So I'm hoping to see that this bearish move will come back, retest this, and give me the opportunity to actually get not long DXY but short Euro USD, because I'm looking at basically the inverse of that opportunity, which is a retest of this resistance, then to sell, because I'm still very bearish on Euro. I'm looking at the larger swings in the market. We're still printing successive lower lows and lower highs. This is our previous high as well, creating some new lows, and we still do have somewhat of a very corrective pullback. So I'm looking for this to eventually topple out and the continuation back to the lows. So that remains my plan. Same with NZD USD as well, still successive with these lower lows and lower highs. I'm looking to see if we can print another one, and I'm looking to see again if we can retest the high there. Similar opportunity to Euro. I'll probably just look to take which one sets up better, because it's pretty much the same trade, but that's what I'll be looking at for NZD as well, and gold as well. I do like the upside here. It looks like we're starting to see a bit of life come back into gold, being very corrective for the past few days, and if we can start breaking higher, especially take up this high as well, that will leave behind some really nice long opportunities in the retest, because I think it's probably a matter of time before we do get back to the highs at 2,400. So that's kind of what I'm focused on in terms of the dollar pairs.
I like it, and I'm on the same page with you on gold here. Nice little push, just from a high level fundamentals perspective. It seems like there's like a trend towards central banks wanting to cut rates. That's really positive for gold, but the question is, will the price action kind of give us that confirmation? I think we have like the same exact chart drawn up here on gold. Question is, you got this kind of recent downward pressure on gold, but can we break out here? And if that happens, if you take a look at that daily chart, it does, in my opinion, if you start seeing break of structure on the 4 hour, suddenly I think this daily chart level of support is a little bit more more strong than maybe we thought. Again, it's kind of, I was thinking about this recently with gold, and I'm very curious to hear Marco's perspective on this too in just a moment. This actually looks like it doesn't look like a big pullback in the context of this huge move, but in terms of just a normal sized gold movement, that is a peak to trough move of like 6.3%. That's a substantial move. It's a $150 move on the price of gold relative to the dollar. That's a big pullback. Like, it may not look like it per se on the chart. It's not like it pulled back all the way down to here, but from just a pure perspective of its usual move, that's a very appropriate and generous pullback. So I guess now the question is, do we get the follow through to start saying, okay, maybe that was it, mikey that's the new low for now, and perhaps we start pushing back up, back to that high? And I agree. In my opinion, Miko, I think that's not the high of 2024. We could be wrong about that, but if we see a path towards rate cuts for not just the US but other places as well, I think you may see gold push higher. We'll see if we're right about that. I guess, Marco, what do you think? Hourly chart, 4-hour chart, whatever you'd like to look at. Gold recently kind of choppy, but is it starting to form something here?
Sure. So gold for me on this 1-hour chart is looking pretty flat. So let's bump it up to the 4-hour. 4-hour still looks flat to me, so I'm going to have to look at the daily. Now, for the daily chart, just by gauging the momentum, I can see large bearish legs, which I don't like to see. So it would not be a buy setup for me personally, just according to the technicals. But again, the fundamentals are a completely different story. Sure. And I don't like this slowdown on the top either. Kind of slower candles starting to form and red candles starting to appear as well. So for me to be a buyer in this market, I would need a confirmation, another, let's say, large bullish leg, and then a possible flag formation or a nice break and retest. But I would definitely like to see a big blue candle, a big confirmation that the sellers are not winning, because in these two candles, the sellers, for me, are still in control just by gauging the momentum. Overall, sure, shooting up, absolutely. If we go maybe to the even weekly chart, this is still very, very bullish. But on the daily, I would just like to see that blue candle, that explosion to the upside, and then I would look for some nice buy setups.
Yeah, no, totally. I think that's a fair point too, because if you are, for me, like with my own strategy, I fundamentally like gold to the upside. But what that can sometimes mean is that I can sit in an idea for a long time. The biggest criticism that you can make in my own, criticism, my own approach with fundamentals, is that it really does not help you very much with timing. Like, timing is not super, rigid with like a fundamentals approach. Now, I guess you could make the argument fundamentally, like you could wait for that big green candle that you're talking about, or big blue candle in your case on your charts. That's usually going to coincide with a shorter term fundamental jolting catalyst. So I guess you could say, I'm going to wait for a big green candle, and likely at the same instance, something that really triggers another fundamental spike as well, which again, that's the cool thing about overlapping technicals and fundamentals, is that a lot of times we can end up spotting the same moves, which is really cool. So yeah, we'll have to keep it there for gold. I'd be very curious to see, again, if we can get maybe another candle like this, maybe another breakout candle here of this consolidation. To me, that would be a really positive thing. But I've said before, like, I don't mind holding through chop periods, just personally because of my own approach and strategy. And I think also, though, it's fair to say, let's wait for some sort of movement, some sort of catalyst here, and then go from there. I guess next up on the list is the indices, and oh my gosh, they're so boring right now. In the last 2 or 3 days, I have not done anything, but it's because the catalysts have kind of dried up. A lot of the big tech earnings are behind us. A lot of the big economic data that we've been looking forward to is behind us. Jobs data, Jerome Powell speaking, PMI numbers. A lot of the numbers have come out. So we've slowed down. But next week we have CPI. So I guess we'll go to, I don't remember who went last. Let's just go Marco, Miko again. So Marco, S&P 500 or NASDAQ or Dow, just thoughts on indices really quick.
Sure. So let me see. Let me go to the 1 hour. On the 1 hour, we saw some nice momentum up. Now, stagnating a little bit. Let me look at the 4 hour. It may be a bit better. Yeah, on the 4 hour looks nice. Some bullish momentum starting to kick in. I like this leg. This leg is nice. This leg is particularly nice as well. So my bias is for this to go up. I'm not seeing any selling pressure in the last couple of days of price action. So up, let's say starting the 1st of May all the way to now, I'm seeing some nice bullish momentum. And on the daily, potential. This is exactly what I want to see after this large selling pressure. I'm seeing some bullish pressure starting to kick in. The buyers are winning again. So this large uptrend may be continuing, and this just may be a correction before we continue up. But for me, of course, I would need to wait for the price to smash the highs, because this may be no man's land. So I would look for an extra confirmation. I would look for a candle like this that closes above preferably, and then the next one to continue, and then we're at new highs, and that's the territory where I would be interested. Okay. So currently not really 100% let's say confident in my analysis, but if it smashes the high, then it's game on for buy setups, I would say.
Sure. And I guess same question to Miko. Take a look at S&P, NASDAQ, Dow, whatever you'd like to look on the indices side. And what are your thoughts on it recently? Had a nice little comeback here, right?
Yeah, very impressive. We had a very strong bearish candle. I remember last time we spoke was around here. Things weren't looking too good. However, we've had some strength with these bullish candles, and I'm very well, I was going to say very confident, but I am confident. But of course, I don't know what's going to happen. But this to me looks like price has printed it in its next higher low on the indices. S&P, US 30, NASDAQ. I'm looking at this as being the next higher low in this massive rally. And if that is the case, then we do have a very good chance we're going to come back to the high. So dropping to the 4H, again, they're all kind of set up very similar as well. They all kind of have this push, pullback, push, pullback, push. So if I was looking to trade the indices, I'll be looking at a pullback, a retest of this high here, looks really good, and looking to see if we can find some confirmations for a higher low. That's for NAS, US 30, same thing as well. Looking at a pullback, retesting some high. Again, looking for a higher low, a push back to the high there at 39,800. And S&P, same thing as well. Looking at another retest of the high for continuations back to the all-time high there as well. So yeah, for the indices, I'm very bullish. I'm liking the momentum we're seeing. I think a good pullback could be a really nice opportunity to trade it back to the high. And yeah, we'll probably put in some higher highs as well.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.